Morning, everyone, and thank you for joining us for Zeifmans non-resident digital event series, Cross-Border Edition. I am Brian Cohen, a U.S. tax manager here at Zeifmans. Before we kick things off today with our guest, Sohail Zayona of Owemanco, I would just like to share with you all a little bit about Zeifmans. We're a full-service tax, accounting, and consulting firm based in Toronto, Canada. We support our over 9,000 clients through every step of the business. Our services include business advisory, valuation, corporate finance, transaction services, corporate turnaround and insolvency, and estate and succession planning. Please feel free to ask questions throughout, and we will try to address as many of them as we can at the end. With that, I would like to officially welcome our guest, Sohail Zayona, partner and COO at Ontario Wealth Management Corporation, also known as Owemancos. Sohail, why don't you tell us a little bit about yourself and what you do?
Thank you, Brian. Thanks for having me. So just to start, I'll tell you a little bit about Owemancos. So Owemancos is a mortgage brokerage, mortgage administrator, as well as an asset manager of a pool of mortgages. We were in 2001, and in 2010 we created our main funding vehicle, which is Owemancos Mortgage Trust. We're in the bridge lending space. We're in the $1 to $15 million space on a per transaction basis. Those are first mortgages. Sometimes we do seconds. We're scattered across Southern Ontario as well as the United States with a focus on the Eastern Seaboard. We have a portfolio of diversified loans, roughly 120 mortgages under management, and over $220 million in mortgage receivables. I am the Chief Operating Officer as well as the lead originator for us in both Canada and the United States. And I've been doing that for over 7.5 years.
All right, wonderful. I know that your portfolios are split between Canada and the US, just as you said. What are some of the differences you see, I guess we can call it, in the alternative lending space in both of these regions?
Sure. So before I get into the general differences between the two platforms, Canada and the US, let me give you some overview of how we got to the US market. So unlike Canada, which, in 2009, 2008 credit crisis, we didn't have a significant real estate downturn. The U.S. did. So 2010, which was the time we set up trust, we found an opportunity south of the border where, as you know, there's lots of distressed properties that lost their anchor tenants or banks foreclosing on them. So we thought that this was an opportunity to enter a market that had essentially zero liquidity as far as financing was concerned at the time. So we did our first deal in a suburb of Chicago. That was a note purchase. So what I mean by the note is one New York-based investor was buying the defaulted paper from a bank. And at that time, the borrower who owned the property was completely underwater. So he basically handed over the keys to the bank and what's called a friendly foreclosure. So my guy, the investor, he went and bought these properties, took them over, and then, repositioned them into, perhaps, renovated some units, brought in new tenants, or, simply flipped them and made a profit after a number of years when the market started going up. So that was a pretty good entrance for us in the market. Fast forward to 2013, we entered the New York market, which is the current major lending hub for us. Since, then the market in the U.S. has, gotten more and more competitive. More and more people are entering the alternative lending space that we're in. And, the impact, of course, is, rates have gone down. Leverage, which is, the proceeds that the borrowers asked for, have gone up. So to go back and talk about the differences, well, the U.S. market is vast and fragmented. You've got, major urban centers, L.A., New York, Southern Florida, whereas Canada, the market is pretty concentrated in the Greater Toronto area. In the U.S., we're typically doing, strict commercial transactions, larger deals, and in our experience, we've had better risk-adjusted returns in the U.S. market. Now, with the onset of COVID, we thought, with the market here being competitive and prices continue to escalate, sometimes double-digit increases, we thought that COVID was going to be the pin that pops the bubble, if you will. And little did we know, with the stimulus spending and the market has kept going up here, and the rates for what we can charge on alternative mortgage products have gone down. And in the U.S., it's a little bit uncertain still. The impact of COVID, not only do they have more cases, but the impact on the economy and real estate in particular is more manifested.
So the Canadian market, relatively impervious to COVID, U.S. market perhaps more affected.
Correct.
Okay.
And what the future brings, we're looking at it very carefully.
So you're obviously very diversified across Canada and U.S. Owemancos, do they have more than one fund, say, allocated geographically, or do you just have one fund with sort of everything in it?
Yeah, so good question. So like I said, our fund was incepted in 2010. That same fund carries both Canadian and U.S. content. We're roughly 60% in Southern Ontario and 40% in the U.S. We were at a point in time 50-50. We do not offer a separate fund, but we do have a small syndication arm. It's less than 10% of our book of business, and it's typically limited in scope. And the people who we offer those syndicated investments to are limited. They're at minimum, they have to be accredited. And with the recent changes, the proposed changes in the new regulations here, we're now targeting permitted clienteles for those investments. So to answer your question, we've thought about potentially carving out a U.S. fund, but at the current stage of our evolution, that's on hold.
Okay, so at the moment, your investors sort of get pretty good diversification just within your one fund, which is, as we mentioned, very significant with COVID, different given the sort of two different environments with the markets.
And personally, we've even discussed the idea with our investors about setting up a separate U.S. fund that's denominated in U.S. currency, would be invested in U.S. assets. We've had some pushback. People say to me, "Sohail, well, I like your fund because you give me diversification across in the U.S." Not a lot of companies have that, and so they want to be in a diversified vehicle geographically.
Right.
The concept of a U.S. fund is still being discussed here internally, and as we grow, we may go through.
Okay, wonderful. So as a Canadian-based fund with activity in the U.S., you're obviously subject to certain U.S. tax implications. I imagine a lot of the income that flows out of the U.S. is really interest income. I mean, you're mortgage lending, right? Can you talk a little bit about the U.S. tax implications and sort of how they flow up through the U.S. back into Canada?
Sure. So that's a very good question. So Owemancos Mortgage Trust is an open-ended investment trust and operates through a limited partnership structure. So it's RRSP, TFSA, if eligible. Now, it's a full straight flow through from the Canadian standpoint, is that we don't pay any tax at the corporate level. It flows all to the investors, and they pay the tax on the income, on the net income, the net taxable income that generated on their tax slips. So in the U.S., it's a little bit different. So as a non-U.S. doing business in the U.S., we're generally, in accordance to the U.S.-Canada income tax treaty, we don't have a permanent establishment. We don't have active employees in the ground in the U.S. We don't have offices in the U.S. It's all sort of done from here. We go to the U.S. to inspect our properties, meet our sponsors, but we don't have a physical presence. And because of that, we don't have a permanent establishment in the U.S., and therefore we don't have an obligation to pay federal corporate tax. Now, some U.S. states and cities do not recognize that federal treaty, and they impose their own, sometimes subjective criteria of what it means to be doing business in that state or city. And as a result, we have had to file taxes in those states and cities and pay withholding tax to U.S. jurisdictions. Now, the withholding tax, the impact of it is the investors of the fund, they get a foreign tax credit here when they file their tax returns. So effectively, they're not paying double the tax, they're whole. Now, there's an impact on exempt plans, RSPs, TFSAs, and RIFs, since, in the case of a TFSA, never pays tax, and in the RSPs, the taxes are deferred.
Yep.
You can't carry credits over, so you lose them effectively. Your yield is
Right. So, as a Canadian-based mortgage lender, you're operating in the U.S. It's very treaty-friendly, which of course is only
sure.
relevant to the IRS federal level taxation, but there are of course state tax implications that you have to worry about. Zeroing in sort of on your U.S. properties and the people and institutions that you lend to, how do they generally find you? Are they U.S. based and they sort of just cast a wide net in sort of the lending community and they make their way across the border and they get to you? Or are they perhaps Canadian based and they find you through channels closer to home?
Yeah, so good question. We have that all the time, especially when I'm getting on a call with a prospective borrower in the U.S. They're like, well, why am I talking to a lender from Toronto and I'm sitting here in Manhattan? It's a good question. Similar to the way borrowers find us here in Canada, the same happens to the U.S. So there's, mortgage brokers, intermediaries make the referral and broker the transactions to us. The type of borrowers range. They could be developers, investors, owner operator of commercial properties, and sometimes small to mid-sized real estate investment firms. And on the Canadian side, you get some Canadian borrowers looking to borrow on their U.S. properties, and a lot of that is they want to deal with a hometown lender.
Sure.
That's it.
Right. Well, with COVID, everyone's getting used to the remote environment, so perhaps that barrier has been taken down to some extent. So, Sohail, I just want to ask you one more question because we're running short on time. When I think of your space, I primarily think of pre-development projects where a loan might not be backed by any physical real estate just yet, but I do know that you guys also lend on established real estate, post-development projects. Can you walk through, I guess, quickly, what are some of the reasons why such a project would make its way to you, and why those lenders, might not have found success through the alternative channels with the traditional banks and make its way to you?
Yeah, so there's a number. You're 100% right. The majority of the alternative lending space is construction and pre-development land loan activities as developers take project through the approval cycle and eventually construction lender. That's a lot of my competitors do. We're a generalist in the sense is our specialty, no specialty. We get to sort of do it all, whether it's a land loan, whether it's a construction deal, whether it's a second mortgage on a house and the guy needs the money for an investment purpose. So why some people come to us when they have improved properties could be a myriad of things. It could be that the properties themselves in transition. They could have just lost a main tenant on a strip center and the property do not necessarily cash flow to support a conventional lender to do the loan. There could be impact on the sponsors themselves, perhaps a historical bankruptcy or a pending lawsuit, or a low credit score, or some bruise or story that would make them ineligible for a conventional lender, such as a Schedule A bank, a credit union, life company, and what have you.
Right. So so your portfolio certainly includes, a geographical diversity, and you also go into situations with, deals that have different characteristics. So sounds like there's a lot of diversification there from sort of all angles.
It's pretty interesting. A lot of it falls on speed. I get calls sometimes where the property and the borrower 100%, cash flows and aligns themselves with it's an institutional deal where a bank can do it, and I end up winning the deal strictly because we're able to deliver that speed, flexibility, and we're not a check the box kind of lender. We're more holistic. As an alternative lender, we're relying on the underlying value of the collateral. So our focus is, on the loan to value of the underlying security, whereas banks may, want to check every single box, and that's their mandate. That's why they're lending at, 3-4%, and, I'm significantly more expensive.
Got it. Got it. All right. So with that, I just want to wrap up here. If you want to get in touch with Zeifmans, definitely feel free. If there are any questions you didn't ask in the comments, you can get in touch with us. If you're a prospective borrower, you have a real estate deal that you need financing for, whether you're in Canada or in the US, and certainly whether you're an investor just trying to get access to that mortgage market, definitely get in touch with Sohail at Owemanco. Stay tuned in just a few minutes at 11:30 on Zeifmans' Instagram page. We'll be joined by Phil Rosenzweig from Browse, who's the CFO there, and my colleague, Chaim Rosner. Sohail, thank you so much for being with us. Do you have sort of any final closing thoughts for our audience?
Yeah, I mean, as everybody's going through, what's going to happen over the next, let's say, 6 months to 12 years, to 12 months, of course, the ultimate focus is COVID and how successful that vaccine is going to be, and what impact is it going to be to the economic environment in general. And of course, the real estate market is not immune. We're looking at it closely. We're, of course, not diving into any COVID impacted assets at this moment in time, whether they're hospitality, resorts, or, big retail type establishments, big box. So let's see. We're optimistic that this vaccine is going to be a success, and will get us out of this, and prosper for the future.
Right. Well, let's hope so for us, for everybody.
Sure.
All right. Sohail, thanks again.
Thanks, Brian.
Have a great day, everyone.
It's my pleasure. Thank you very much.
My pleasure. Take care.